This is the Asia Trade. I'm Paul Allen in Sydney, where markets have just opened.
I'm Haidi, Stroud-Watts. The top stories is our Asian stock markets to open under pressure as a sell-off in the world's biggest bond market deepens on signs that the Fed won't cut interest rates before July.
Samsung set to report a quarterly operating profit jump this hour, but investors will be laser focused on signs of a turnaround in its AI chip business.
And we hear exclusively from the new Hyundai Motor CEO, Jose Munoz, about business plans under the second Trump presidency. We do have breaking news, breaking data that is coming out from South Korea at the moment when it comes to the current account balance data. November current account surplus coming at $9.3 billion US dollars. The October current account surplus coming at $9.78 billion. Last year we saw that quite a different number there for November at $3.89 billion. So that leaves a goods trade surplus at $9.75 billion in November versus that $8.12 billion for October. This will be kind of key in the coming months, given how much it speaks to the trading relationship with the US in particular, that big sort of trade account surplus that South Korea runs against the US. And the finance minister has, of course, spoken about the idea that trade diplomacy may be needed if the tariff talk becomes tariff policy against South Korea's economy. But let's get to today's agenda, which is really sort of front and center when it comes to some of the rhetoric that we've heard from President-elect Trump in this press conference that really was very wide-ranging, right, when it comes to his potential intentions and his kind of fixation on Greenland, again, putting us Denmark back in the spotlight. He's reiterated his interest in buying Greenland, threatening to levy tariffs on Denmark, refusing to rule out military force to acquire the island. He's also sort of made some comments when it comes to the Panama Canal. We know from the first Trump administration that, there's a lot to kind of distinguish between what's said and what actually puts into action. But it certainly signals that we're going to get an exciting start to his term.
Oh, definitely. Brings back memories, doesn't it? Denmark's a NATO member, by the way. Just thought I'd point that out. Hey, we heard from Jen-Hsun earlier as well. He expressed an eagerness to meet incoming President Trump. And, of course, tariffs could impact Nvidia, which relies a lot on overseas sales and marketing. Let's have a listen to what Jen-Hsun had to say.
I'd be delighted to go see him.
Have you been invited?
Not yet, but I would be delighted to go see him and congratulate him and do everything we can to help this administration succeed.
Yeah, we saw Nvidia slipping more than 6% today. Investors always expecting more when it comes to remarks from Jen-Hsun, even though he did unveil a number of new chips, software, services, etc. as well. But if we take a look at S&P futures, kind of flat at the moment. We did see most of the US markets selling off pretty heavily today, tech leading the way again. Once again, a lot of action in the bond space as well. 10-year yield up 6 basis points. Very strong jobs data, very strong job openings as well. So the Fed, no rush, Heidi.
No rush, and that kind of leaves an interesting space when it comes to how Asian markets and central banks might respond, right? Certainly here in Australia, we know that the RBA, being quite behind in this cycle, is in no rush there as well. But this is what we're seeing when it comes to expectations as we set up here in Asia, looking to kind of track that US route on these elevated inflation risks. We're seeing a pretty muted start to trading here in Sydney. Nikkei futures upside of about 0.2%, but a lot of focus will be on that US services index, that highest number since 2023, and what that means for kind of the stickier side of inflation, Paul.
Well, Samsung is due to report preliminary fourth quarter earnings later on this hour, coming off a very tough year that saw its market cap shrink by about a third. Valuations suffered as it navigated internal leadership struggles, labour issues and souring sentiment towards Korea's chaebols, all the while facing a tough business environment that is hyper-focused on AI strategies. So, into those headwinds, let's get a preview from Bloomberg Intelligence Technology Senior Analyst Masahiro Wakasugi. So, Masahiro, what are we expecting from these preliminary results today?
Good morning. Yes, if we look at Samsung's operating profit, we think it will not be very strong, and of course its peer Micron already reported, and the guidance was not so strong, and Samsung has been struggling with the HBM business, so we don't expect strong numbers. But if we look at the market consensus, and the printed market consensus may look around 8.8 or 8.9 trillion won operating profit for the December quarter. But if we look at the recent 10 or 15 analyst estimate for operating profit, it's ranging around, say, 7.5 trillion won to around 8.0 trillion won. So maybe consensus has already come down quite a bit. So we don't think it will not be very much disappointing, but the actual number may not look strong.
What are the sort of key points for you when it comes to the sales and profit numbers?
Yes, if we look at the numbers, and we don't have some breakdowns today, but maybe DRAM business is very important, and the NAND flash business, and also foundry business. And maybe the key point would be its DRAM business, and its HBM portion is a little bit smaller than SK Hynix, so maybe the AI benefit should be smaller for Samsung Electronics compared with SK Hynix. And Micron was saying that its NAND flash business is weakening, so I think that the same situation may be happening to Samsung Electronics, so that may be causing some weak numbers for Samsung Electronics. And Samsung has a foundry business as well, and it's not doing very well, and it's been struggling with low production yield so far. So we don't see very much strong recovery for the foundry business. So that would be the kind of weak point. And Samsung also has a display business or a smartphone business, and seasonally it's not very strong quarter, especially for the mobile phone. And March quarter, they will launch a new Galaxy flagship model. So March quarter should be good for the mobile phone business, but the December quarter is not so good for them. So basically, these business should be very much in focus for Samsung Electronics.
Bloomberg Intelligence Technology Senior Analyst Masahiro Kusugi there ahead of Samsung numbers. Well, US President-elect Donald Trump is threatening to use economic force to make Canada a part of the United States. Bloomberg's Vancouver bureau chief Thomas Seal joins us now, and of course we're sort of at this point where we know there's a degree of sensibility in terms of separating the rhetoric from what actual policy might be. But what do you make of this? What's been the reaction?
The reaction was bipartisan, tripartisan, across the board, hitting back from the leaders of the political parties in Canada. We saw the strongest words so far from the outgoing Prime Minister Justin Trudeau, who obviously announced he was resigning yesterday. So the leadership contest has now been triggered with his party. He said there isn't a snowball's chance in hell that this would happen. Pierre Poilievre, the Conservative leader, who is polls indicate the favorite to win an election during the next few months, he said it will never happen. Trump, during this press conference, said, I don't care what he thinks. So we'll see how that negotiation process works out. And as you say, maybe it's tactic, maybe it's rhetoric, maybe it's anchoring expectations in such an outlandish place that, what the talks actually revolve around seem much more reasonable, even if they're 25% tariffs, 10% tariffs. The US, Canada, Mexico free trade agreement that was negotiated during Trump's last time in office comes up again at 2026, possibly earlier. And so all eyes are on that and possibly tariffs, on day one of his office.
Thomas, let's talk about who the next Prime Minister is likely to be. As you mentioned there, Pierre Poilievre appears to be in the box seat once an election does eventually get called. But Mark Carney throwing his hat into the ring as well. How's the landscape shaping up?
Yes, the Liberal contest is underway. Mark Carney last night said he was exploring a run for leadership. Other contenders, I think today, François-Philippe Champagne, who's the industry minister, said he was also thinking of putting his hat in the ring. People widely expect Chrystia Freeland, the former finance minister who resigned, criticizing Trudeau last month, people saw that as almost the soft launch of her campaign, putting clear water between her and Trudeau. All of them face an uphill battle against Pierre Poilievre, who is 20 points ahead in the polls, and he has been 20 points ahead in the polls for, I think, a year or more. That said, campaigns can change things quite fast. Canadian campaigns are very different to, say, American political campaigns. It's going to be 50 days maximum at the start of the formal campaign. The Conservatives have raised more money. These are much smaller sums of money, again, than US campaigns. So it's really the Conservatives to lose, but stranger things have happened.
All right, Bloomberg's Vancouver Bureau Chief Thomas Seal there. And we do have to note that Mark Carney does hold a series of business and philanthropic positions, including chair of Bloomberg Inc. Well, Canada's not the only territory in Trump's crosshairs. At the same news conference in Florida, the president-elect also said he would rename the Gulf of Mexico as the Gulf of America. And he declined to rule out military force to seize Greenland and the Panama Canal, threatening tariffs on nations that don't cooperate. Panama's already vowed not to give up the shipping canal, and Denmark says while it welcomes US investment in Greenland, the world's largest island is not for sale. Heidi.
Coming up in the Asia trade, we talk about market strategy with Defiance ETF and take a look at Asia's energy transition exclusively with GE VERNOVA CEO. Counterpoint Research helps us dissect those upcoming Samsung numbers. Plus, BlackRock joins us to discuss the outlook when it comes to bond markets. This is Bloomberg.
It was a pretty ugly day for US markets. We saw the S&P selling off by more than 1%. Tech stocks hit even harder, yields rising. We had some strong data out of the US, which really underscores that idea that the Fed can take its sweet time when it comes to easing. Let's get some more perspective on markets. Joining us now is Syvia, Jablonski, CEO and CIO at Defiance ETFs. So, Syvia, what do you make of today's pullback? When you see moves like that, does it say to you, well, stocks are overvalued? Or do you look at it and think, I might buy this dip?
Yes, great to be here with you today. Well, I think I look at today as a dip buying opportunity. You know, my view on 2025 hasn't really changed that much. I know that some of the Fed speak has spooked investors a little bit in terms of, you know, perhaps that cut gets pushed out into the second half of the year or into the summer. But if you kind of take a step back, you know, we're looking at a strong economy. Corporate earnings have been fantastic. You know, the outlooks for corporate earnings continue to be positive for this year. We have a strong and healthy consumer with higher wages, you know, that has been spending. I think, you know, overall the economic data looks pretty good, and you know, we did avoid that recession. You know, we got a soft landing, and so I think that in a way we're kind of panicking for the wrong reason, right? If the Fed had to cut rates every month from here on in, that means that the economy is in trouble. You know, the fact that the Fed can cut but kind of taper the speed means that, you know, we're in a pretty good economic situation. And I think that, you know, when you get those two cuts towards the end of the year, that is a potential tailwind for equities.
So, yeah, good news is good news, it appears. You like a number of sectors in this environment, particularly quantum computing as well. How do you approach that? And I understand you have an ETF for that as well.
Yes, we do. And so the way that I like to think about quantum is, you know, last year we had that ChatGPT moment for Microsoft, right? That kind of came to the fore, and retail investors got really excited about AI, and all of a sudden you started seeing a lot of flows into different AI stocks and ETFs and things like this. And, you know, we were always thinking that, you know, eventually investors are going to start to kind of like expand their view on that and think about, you know, what else do you need for AI? What else do you need for AI to work, and which companies can benefit? And so for us, that was very much quantum computing. And quantum computing is basically, you know, allows machine learning to work. It allows data to be processed at fast speeds and in parallel, and, you know, at this, you know, kind of at the same time, running different codes and algorithms and things like this through supercomputers. And it'll impact finance, it'll impact, you know, healthcare by simulating molecules, cryptography, you kind of name it, quantum plays a role. And so I think this year's ChatGPT moment is very much quantum. And so I like both the large cap stocks like Google that has Willow and Nvidia, which is invested, IBM and Honeywell. But I love these little smaller cap names, which are actually becoming larger companies now, whether it's D-Wave, IonQ, Rigetti. You know, some of them have had over 1,000% performance last year. And I think that, you know, this innovation is going to continue to be a positive one for 2025 as well.
certainly a long-term story, but do you worry that in the short or medium term, given the enormous amount of investment and valuations that's going into the AI theme, are investors and Wall Street broadly starting to run that risk of running out of patience to see returns?
I don't think so. I think that, AI is in its early stages, and this is sort of how the market works, right? There's a lot of just like behavioral, emotional sentiment to this. We get an announcement about something exciting, whether it's ChatGPT, whether it's the metaverse, whether it's whatever it is, and all of a sudden, investors might pile into a stock, and then it kind of retreats for a while, and then, we kind of like lay the groundwork and get back into it in terms of like a dollar cost averaging, gathering strategy. So I think with quantum, I think it's something that plays out, every year from here on in, basically for the next 5 to 10 years, similar to AI. And I do think that at some point, which will probably be, this year, investors will start expecting, more information on corporate earnings calls about how AI contributed to the bottom line, or where R&D has gotten us and things like this. But great innovation takes time too. So I think you have to temper, exuberance with patience.
Bitcoin's march above 100,000 didn't seem to last very long, and there seems to be a little bit of a reality dawning. Do you think the rally resumes once there's more crystallization on what the new administration's crypto policies actually are, or do you think that perhaps we've sort of hit a peak for now?
I think it was just part of the pullback of today's, broad-based market. I think part of it is the Fed news. I think part of it is that, yesterday was such a, hot day across the market, particularly for crypto and tech stocks. And I think you have investors taking some gains, and I think you have some trepidation about what the Fed's going to do with rates. But this is par for the course a little bit in this market. I mean, we've seen it before. We've seen these, massive rallies and a couple of days later, a pullback. And so I think it's just a bit of a reset, and, historically, at least for the last couple of years or so, investors have bought the dips, and I would expect the same in crypto. I mean, I just expect this asset class to kind of double, where it is now in coming years, and so this is just a temporary setback.
Syvia, really great to have you on as always. Syvia Jablonski, CEO and CIO at Defiance ETFs. Coming up next on the Asia Trade, our exclusive interview with Hyundai Motor's first foreign CEO, who tells us the Musk-Trump relationship should be good for the EV industry. This is Bloomberg. This is the Asia Trade. Well, a Seoul court has extended the arrest warrant for impeached South Korean President Yoon Suk-yeol after the lead investigating agency asked for additional time. Last week, South Korea's anti-corruption agency failed in its effort to take Yoon into custody due to resistance from the president's security team. This comes as Yoon's lawyer says the joint probe doesn't have the authority to investigate insurrection.
Well, Hyundai's new CEO, Jose Munoz, says Elon Musk's close relationship with Donald Trump could be beneficial for all automakers. For more on that exclusive interview, our Chief North Asia correspondent Stephen Engel joins us now in Seoul. So, Stephen, no concerns from the Hyundai CEO over that close relationship between Musk and Trump. What's he saying?
Well, I'm sure there's some concerns, but obviously he sees Musk's having an ear in the White House when Donald Trump returns to the presidency in less than 2 weeks as being a good thing overall for the auto industry, because he will be a champion for EVs, even though EVs are in the crosshairs, if you will. We've heard rumblings from the incoming Trump administration that some of those Biden pro-EV initiatives, including a $7,500 tax credit, could be wiped out, and IRA from Biden could also be essentially, revoked, and that could impact, obviously, the car makers in the United States, like Hyundai, which has been growing its EV platforms and offerings, like the Ioniq 5, which is being built in a mega new factory that opened in October in the outskirts of Savannah, Georgia. Now, in this exclusive interview, the first TV interview for global media since he took over as president and CEO of Hyundai Motors. By the way, the first foreigner to head a large chaebol in South Korea, Jose Munoz, talked about the challenges and opportunities with the new administration coming in and Musk having the ear of Donald Trump.
If you look back Our company took the decision to make a significant investment in the U.S. during the previous Trump administration. We haven't invested in the U.S. because of IRA or because of incentives in general. It's not a good policy to just simply make an investment because of incentives, because they can come and go, right? So as such, we believe that the U.S. market is the most important for us today, and it's going to continue to be the most important in terms of not only the absolute, but also the growth. And therefore, investing and localizing is a good strategy. So when you tell me, hey, what happens if IRA goes, okay, first of all, that's not my responsibility, and you know, I'm not in charge of the policy and the administration, but I think we are in a better place today than we were 4 or 5 years ago, simply because the investment gives us much more flexibility.
Do you think the Trump administration will be successful in rolling back some of those pro-EV initiatives, given the fact that it has to be approved by Congress?
We cannot influence the government, and basically our only job is to be able to adapt flexible actions and the right decisions to be able to be competitive and win in the marketplace regardless. So at the moment, if you ask about the position of the most of the members of the Alliance for Automotive Innovation, where all OEMs belong to in the US, so probably most of them, if not all, would tell you that they support the current structure, because there is a fact that there has been a growth trend in terms of the introduction of the EV technology. There's more offer, there are more people buying, etc. But there is no doubt as well that the pace has been slower. So most of the OEMs would like them to stay. But in our own position, again, we didn't invest because of the incentives, because we took the decision before. And then if the incentives go away, so we're going to continue with our strategy, which is no other than providing the best product and the best technology at a competitive price to our consumers. And again, our numbers suggest month in, month out, that sales of EV and lately hybrids are the ones that are driving the growth for us and for the industry.
How concerned are you, though, that the head of your chief competitor on the EV front, Elon Musk of Tesla, will have an outsized influence in the White House?
I don't see that as a concern, honestly. So if anything, I think having someone who is very close to the US industry and to the EV world, I think it should be positive for the industry, because I think it's in his own interest, and probably it's in the interest of the country, to trigger investments and growth, and also to ensure that we maintain competitiveness in our country vis-a-vis Chinese and other competitors, right? So I think that is positive.
And Hyundai obviously has a big stake in what the policy is going to be out of the United States. 23% of global sales for Hyundai come from the United States. And coming up throughout the morning here on Bloomberg Television, we'll have more parts of my exclusive interview with Jose Munoz, including details of how Hyundai is going to be selling cars on Amazon.com.
Looking ahead to that conversation, our Chief North Asia correspondent Stephen Engel there in Seoul. This is Bloomberg.
This is the Asia Trade, the latest now from the corporate front. Honda has debuted prototypes of two of its latest electric vehicles, a sedan and an SUV, to be built in the US. Both models have a new in-house operating system called Asimo that controls functions including advanced driver assistance. Honda also announced that it is partnering with Renesas Electronics on a high-performance chip for models due later this decade. Japan's Suntory says it's looking to explore the ready-to-drink or RTD market this year with a big focus on the US. CEO Takeshi Niinami told Bloomberg they're launching lower alcohol content drinks to win over consumers in the US and looking to expand the beverage giant's presence in India.
We have the huge background of R&D with the science, so that we can match up with the needs of the younger generation. That is usually a healthy consciousness. So less sugar and less alcohol content. So I think we can win the market in the US. In addition to the United States, we'll go to the India with our product portfolio. Soft drink, RTD, and the full bottle spirits. There's a huge potential for us to expand our presence in India. We are number 3 in the world in the space of RTD. So we want to be number 1 within 5 years. So we have to expedite our effort to be somebody in the US at first.
JP Morgan is said to be planning to end its hybrid work option for employees, requiring all of them to return to the office 5 days a week. Sources say the bank could announce the change in the coming weeks, replacing an existing 3-day mandate for many of its workers. JP Morgan employs more than 300,000 people globally. And JP Morgan's joined the rest of Wall Street's biggest banks in leaving the Net Zero Banking Alliance. Departures from the climate finance group follow intensified attacks by the Republican Party, which has criticised what it calls woke capitalism. JP Morgan says it will continue to work independently to advance low-carbon technologies and energy security.
Well, Paul, one of the world's biggest gas turbine makers says Taiwan is its fastest growing Asian market. As a plan to phase out nuclear energy forces the island to find alternatives to power its world-leading chip-making industry. GE VERNOVA is an electric power company formed last year in the breakup of General Electric. It also specialises in wind turbines, nuclear power, carbon capture and grid infrastructure. Joining us exclusively from Tokyo is the CEO, Scott Strazik. And Scott, really great to have you with us. So let's start off with Taiwan. How excited are you in terms of this market? How big a part of this story in terms of the drive for demand is really the AI and chip making space, and what combination of energy solution do you see for Taiwan?
Well, for Taiwan, certainly gas is going to play a role, but that's really a story not just for Taiwan. It's a story for all of Asia. I mean, I sit here in Tokyo today, here to do our New Year's greetings in the country, and we've got 20 gigawatts of gas in Japan today. You're in Australia. We've got 9 gigawatts of gas in Australia. And when I think about where I've been this week, I started the week in Singapore, in which there's a lot of hyperscaler investments into data center in places like Indonesia and Malaysia, where gas is going to play a critical role. So practically speaking, gas is going to be an incredibly important energy source for Asia, Taiwan, and many other countries throughout the region.
It's interesting, you're in Japan, as you say today, and in the last sort of decade we've seen a real shift in terms of public and political support for nuclear following Fukushima. Is that a strong part of conversations that you're having in Japan? Is there a strong interest since that shift in your nuclear technology?
Well, if you take a step back and think about, I sat in a room at COP28 in Dubai a little bit over a year ago, and over 20 heads of state said that we needed to more than triple the nuclear capacity in the world if we're going to reach our net carbon goals by 2050. And nuclear clearly is an important part of the equation. That said, in Japan, we've got a big install base. We're here to support the government in Japan and the communities in Japan as they choose their technologies to drive the energy transition. So it's important in Japan. It's important for the world.
Japan's also approved a lot of offshore wind projects over the past few years as well. But these sorts of projects have suffered a few pitfalls and problems in other countries. What sort of advice do you have for Japan to make sure it's more successful there?
Well, I don't think the challenges of offshore wind really are isolated to Japan. It's really been a global challenge over the last couple of years as we try to build a sturdier supply chain that can really be economically successful for all the stakeholders involved. The reality is offshore wind remains a relatively nascent industry where we need to really drive a much more durable supply chain. We're working hard on that today. We're executing on projects currently in both the Atlantic Ocean and in the North Sea, so supporting customers in both Europe and in North America, and are working hard to serve the customer base here. But offshore wind is an industry that we've got to work on collectively with all the stakeholders to get to a point that it can thrive. We believe offshore wind matters to the world, but we're going through a tough stretch right now with offshore wind, really for the industry. And that's not Japan, that's really a global theme.
Yeah, you say it's a nascent industry, but can it be a profitable industry in Japan, or are companies going to have to run at a loss for a while?
Well, I don't think any industry is going to thrive if the stakeholders involved can't drive a profit. And today, the reality is this has been a tougher economic part of the energy transition than many other parts of the industry. So there's more work to do, but there's no reason that this can't be a profitable industry. But we really need to reset the economics for offshore wind. And something we often talk about is offshore wind is going to be priced and economically more aligned with new nuclear, or more aligned with gas with hydrogen, or gas with carbon capture, than it's going to be equivalent to onshore wind or solar. And at those kinds of prices, offshore wind can thrive.
Scott, I just want to briefly interrupt. We've got some breaking news, something we've been waiting for. Samsung fourth quarter preliminary results. It has missed estimates. We have operating profit at 6.5 trillion won. The estimate was for 8.96 trillion won, so a big miss there. The sales estimate also falling a little short, 75 trillion won. The expectation there was for 77.5 trillion won. It was after the third quarter, Haidi, that Samsung apologized for a bad result. Wonder if we might hear another apology today. That fourth quarter number, a big miss.
Big miss. We will get some more analysis, of course, in just a moment. But let's get back to our guest. So, Scott, talk to us about some of, I guess, the sort of broader energy trends that you think will be the major drivers for demand, or sort of seismic changes that might be significant this year. Because obviously, if you take stock at some of the transition challenges from last year, the overall picture when it comes to certainly, country by country and political consensus and agreement moving forward isn't looking that great.
Well, I think what I would say is it's becoming more and more clear that energy is going to be required, and more incremental energy is going to be required to drive a number of economies in the world, a lot of technologies, including things like artificial intelligence. And that's really going to require an all-the-above technology solution. Gas is going to play an important role. It's a force multiplier that allows us to grow wind and solar at a faster pace than we could without the gas. We'll decarbonize gas over time, both with hydrogen and ammonia and with carbon capture. And as we talked about earlier, nuclear is going to play a role. One of the things we're really excited about is we'll commission our first 300 megawatt small modular reactor in Canada in 2029, and we see into the next decade a substantial growth in small modular reactor globally. So there are going to be many technologies that are going to play a role. And what we really need to focus on is leveraging the technology that we have today, this decade, while continuing to innovate for future decades with things like hydrogen combustion, with things like small modular reactor, that are all going to play an important role as we move forward.
Do you see the supply mix and technology mix as being adequate? Because obviously we've seen just a huge amount from data centers, from AI demand. We're sort of now looking ahead, even as Jen-Hsun Huang said that quantum is years away. But that's a nascent but extremely powerful and power-sucking technology that we're also looking at. So do you think, projecting kind of more into the medium term and longer term, that we do have that adequate supply in terms of the energy mix?
Well, I do think with examples like that, the reality is power density is going to really matter. Scaled baseload power is going to be incredibly important to serve demand cycles like that. And again, that's where things like gas and nuclear that can run at baseload all the time, 24/7, is going to be incredibly important. So that's why we're working so hard inside GE Vernova to industrialize small modular reactors. It's also why we're positioning to really grow our gas business, but not just focused on unabated gas. We're making substantial investments in hydrogen combustion, substantial investments in carbon capture. We have a functioning direct air capture plant today with technology that we're excited about, that we ultimately see a pathway to apply to gas into the next decade. But we're going to need scaled baseload power to meet the substantial growth that's coming. And it's going to require products that we can industrialize at scale.
All right, Scott Strazik, CEO of GE VERNOVA, thank you so much for joining us today. Just want to recap those Samsung numbers that we got a moment ago. Fourth quarter preliminary results, a really big miss there. Operating profits, 6.5 trillion won. That is $4.5 billion in the December quarter, well short of analyst estimates, which were close to 9 trillion won. Revenue also fell short. Sales also fell short. So these are very disappointing results from Samsung, and we will be unpacking them a little bit more in a moment. Counterpoint is going to join us for analysis of those Samsung numbers next. This is Bloomberg.
And just getting a recap of those Samsung earnings, which was a big miss on estimates for the quarter. Efforts to regain market share in AI chips and smartphones clearly still struggling to catch up with rivals like SK Hynix, Micron being weighed down by high R&D and capacity expansion costs as well. That preliminary operating profit for the December quarter of 6.5 trillion won, or $4.5 billion. Analysts had been expecting 8.96 trillion, revenue coming in at 75 trillion won, also miss there. So we're getting sort of some commentary now, Paul, from Samsung.
Yeah, it's not a great set of numbers here, and it really underscores the expense in trying to catch up in the AI space as well. And it's not just that. Samsung is also remaining exposed to weak mobile chip sales. There's a rising supply of legacy chips in China. Samsung saying that memory earnings dropped on weak conventional demand, and mobile earnings also fell on increasing competition. So let's get some more on this now. We're joined by Tom Kang, Research Director at Counterpoint. Tom, what are your initial insights into these numbers? It's pretty hard to find a bright spot here.
Yes, correct. We can say that Samsung is just going through one of its toughest moments in its history. Its main business driver, memory chips, it clearly missed a big cycle, HBM, which is really required for the growth of AI. And then its other products like mobile, consumer electronics, TVs are also hurting from a weak consumer demand, especially the Chinese market. The domestic spend is not going up, and Samsung is really suffering from all these markets we see.
Well, after the third quarter results, we got a rare apology from Samsung. Are we setting up for another apology for the fourth quarter? What's the plan in terms of redemption here, of actually doing something? What needs to happen?
So we think one of the reasons Samsung missed the memory HBM cycle was because they were not accepting that they made a misstep. And I think the apology really kind of starts their reflection. So what we see in the background is that they're really trying hard to catch up, and they're even trying out new ways. So one interesting thing is that they're actually now imitating what SK Hynix and Micron has been doing. So this is a very good sign, but it looks like it's going to take a little bit more time. But we think that the turnaround has started. So it might take a couple of more months, but it's not the same situation as the third quarter under the surface, if you see.
So you would expect to see that, you know, the huge amount that we've seen in R&D and capacity expansion is going to start paying off perhaps in, what, the first quarter numbers?
That is kind of tough, but definitely 2025 will be much better. For example, we think that Nvidia and a lot of other clients of Samsung are really waiting for Samsung's HBM, but they had some failures last year. But this year, with a new method, we think that there's going to be some revenue, but it could be in the first quarter, or it could be in the second quarter at worst. But I think Samsung is trying to do it as soon as possible. So I think their internal target should be the first quarter.
The certification struggle with Nvidia was sort of one of the elements of the lag too. Do you think that continues to be an issue?
Correct. That was the biggest issue, and that's what they've changed. So the HBM memory really generates a lot of heat, and the way that Samsung traditionally did it, tried to solve those problems, failed. So we are seeing that they're trying out new methods, which are actually methods that SK Hynix and Micron have been using. So they're adding a new logic circuit to their to the die, and that will create some difference because it's a proven methodology that SK Hynix has been using. So it could be a big kind of swallow of pride for Samsung, but as they say, if you can't beat them, you should follow them. So Samsung is actually doing that to solve those heat problems within the HBM memory.
Tom, Samsung still, of course, has plenty going for it. Firstly, it is huge, it has scale, and if we take a look at this chart on the Bloomberg as well, we can see that it's very, very cheap relative to its peers. So is there something here for investors to be enthusiastic about?
So I think this is a combination of disappointment from everything that Samsung is doing. So Samsung Foundry kind of lost the advanced node battle with TSMC, and they lost the HBM battle with SK Hynix. So the new growth areas, not the traditional DRAM or NAND or TVs, it's more of the future that the investors are interested in. And it's those two areas that Samsung showed huge disappointment. So if you compare TSMC with Samsung, Samsung is really disappointing, and I think that will continue until we see some turnaround. So I think HBM supplying to new clients would be the start, and I think Foundry, they will be able to play catch up again as well. So the low share price has a reason, but we see some action, but they will have to show that in numbers, and probably it could be the first quarter or the second quarter. It will be one of those.
Tom Kang, who's the research director at Counterpoint, really great to have you with us to dissect those Samsung numbers that have just come through. More ahead on the Asia trade. This is Bloomberg. Well, Nvidia shares fell after a wide-ranging product presentation by CEO Jen-Hsun failed to win over investors in the AI chipmaker. Huang also spoke to Bloomberg Technology about plans under incoming President Donald Trump, as well as the impact of AI on the gaming industry.
AI is going to reinvigorate the video game industry. On the one hand, for developers, it's going to reduce the cost of creating the content. On the other hand, all of the characters that are in the games are going to be smart characters in the future. So every time you interact with them, they're going to be interacting with you in a much more intelligent way. And so the games are going to be more interesting. The characters are going to be more interesting. The content development cost is going to decline. And that's going to be really great for the industry. And so I think that the future is really bright for video games and these virtual worlds. And artificial intelligence is going to really reinvigorate it.
Project Digits. May I pick it up?
Yeah.
$3,000 Project Digits.
Yeah.
A supercomputer you can put on your desk.
Exactly. Could you imagine you're just sitting there just like that? You're working on your PC.
Well, I can't imagine. Why would I need one of these? Probably not me. But how big is the addressable market for this? What is the addressable market?
There are 30 million software developers. There are probably something along the lines of 10 million designers around the world. Probably another 20 million creative artists. Hard to say exactly how many students. I'm going to guess probably a couple of 100 million students around the world. Everybody's going to have to. Everybody's going to have to. Well, they can afford computers, and so if they can afford computers and they would like to have a companion that helps them do AI. This is the way to do it.
Can I just clarify something on it? I think you said on stage Mac OS, Linux, and Windows, but the communication said just Linux.
No. Whatever computer you use, you're literally enjoying how it's going to be used. It's sitting right there, and you just connect to it wirelessly like it's your personal cloud.
I promised the audience I'd clarify that because they're excited. We're running short on time. President-elect Trump has been speaking during the course of our conversation. How imperative is it that you go to Mar-a-Lago and meet with him if Nvidia is America's leading AI company? And will you?
I'd be delighted to go see him.
Have you been invited?
Not yet, but I would be delighted to go see him and congratulate him and do everything we can to help this administration succeed.
A lot of what you outlined on stage last night in the realm of physical AI, I saw XPeng, for example, in the autonomous driving context. That's happening in China. Like, they are doing a lot on robotics. So I'm going to ask you about tariffs. It's likely this coming administration will be as restrictive on technology export, and tariffs will be a function. And how have you prepared for that, Jen-Hsun?
Whatever the administration ultimately decides, we'll give them as much insight as we can from our perspective. And I'm sure that the administration will make the right moves. That's in the best interest of our country.
All right, just a moment. We will have the Open in Japan and Korea as well, where we will be watching Samsung very closely. Market opens next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens, and not a great lead from Wall Street. In fact, that sort of sell-off in tech, these Samsung numbers as well. But speaking of South Korea, we're also watching the ever-developing political saga, right? The extension to the arrest warrant. We could see a second attempt to try and arrest President Yoon on Wednesday morning.
Yeah, and we understand that this attempt could be a little bit more vigorous than the last. There's a number of police officers waiting outside the building, and of course President Yoon has a security detail as well. So that situation unfolding also, but really on the corporate front in Korea, a real mess for Samsung today.
Yeah, could be setting up for a pretty soft start for Korean equities, especially as we saw that overnight decline for US tech stocks, right? But yes, Samsung, that sort of catch-up play is still very much a work in progress. Take a look at how we're just starting to open that session across Japan and Korean markets opening there. And as you can see, the Nikkei 225 seeing quite a bit of downside at the moment. The Topix also off by about 0.4%. Dollar yen not fairly unmoved at this point, but 158, that sort of 158 to 160 window starting to get a little bit worrisome perhaps. And in fact, it's not really just the yen. We could see more of a headache for Asian currencies with this resurgence of the US dollar again, in particular when it comes to some of these trades in East Asia. We can continue really to see that dollar-yen story continue to glide higher with the rise in US yields. Let's take a look at Korea. Of course, this is a market to watch given that softness that is expected to come through from those Samsung numbers. That really a big miss and sort of continues to disappoint after the AI chip missteps. The turnaround still very much in progress, but really that hurt to the business to try and regain market share in AI chips and smartphones continues to see a real struggle there with that number. The 6.5 trillion won operating profit, preliminary number I should say, for the December quarter, missing the projections for almost 9 trillion won. That was the average projection from analysts on the Bloomberg. The Kosdaq seeing the steepest decline, 0.7% lower there, and we have Samsung Electronics there. And it's interesting because we spoke to Counterpoint a little bit earlier, and they had suggested, well, perhaps the first quarter numbers, second quarter numbers, but still a lot of analysts saying that there is going to be a turnaround and that the investment, the R&D, the expansion in capacity will pay off. just not this quarter.
Yeah, and still no sell ratings on Samsung either from the analyst community. Mostly buys and a few holds, but catching up in the space is going to take time and it's going to cost money. It's a very, very expensive business. Microsoft just last week says it's going to spend $80 billion building out data centers, but it's in Samsung's other areas of business as well that suffered. It's still exposed to weak mobile chip sales. There's a rising supply of legacy chips elsewhere as well. So it's not just the AI front that Samsung's got a battle on its hands.
Yeah.
Let's take a look at what's going on in some of the other markets. Meantime, here in Australia, it's a pretty quiet day at the moment. We've got the materials sector pushing higher, but the ASX generally is looking pretty flat. We're going to get CPI numbers out of Australia in a little while as well. The CPI for November back in the target window, but it's going to be the fourth quarter numbers that are really the key to unlocking a potential rate cuts. The RBA's Feb meeting could well be live. A lot of the action that we've seen, though, has been once again in the bond space. Yields on US Treasuries just keep on rising. The 10-year almost hit 4.7%. We had some very strong US jobs numbers. Jobs vacancies still quite high. Business activity data also underscored this idea that the Fed does not need to rush when it comes to easing. Inflation still sticky, and the prices paid component of services PMI surged to 64.4. It's the highest reading in almost 2 years, which just underlines once again the sticky inflation narrative in the US, Heidi.
Yeah, this sort of diminishing likelihood of more action from the Fed. Take a look at what we're watching when it comes to Asia-Pacific bonds as well, because we did see sort of further triggers in the overnight session. The Treasury auction drawing the highest yield since 2007, I should say, in this sort of ongoing global bond sell-off that we continue to see. Here in Asia, you know, one of the things we're watching is China's widest ever yield discount to US there as well. So really further pressure when it comes to what we're seeing with the yuan. So let's bring in from Singapore, Navin Segal, who's the head of Asia Pacific Fundamental Fixed Income at BlackRock. So if you take a look at this run that we continue to see in yields, how much further and where do you find the opportunities in this kind of market dynamic?
Yeah, thanks for having me. So it's an incredible opportunity set that we're witnessing. It's a global opportunity set from which you can create 6 to 7% income streams, right? Now, the yield backup, of course, is a little painful, but in some ways it could also be viewed as a gift. There's still a lot of cash sitting on the sidelines, and that cash can now be put to work at what are, near the highs of yields across 2024, almost 470 on the US 10-year. We think it's an opportunity to put some of that cash to work, lock in these yields. If you add on a bit of spread, you can get up to a 6-7% income stream and sit on that. You don't have to take a lot of duration risk to do so. I think a lot of the volatility we've seen in the bond market has been at the long end of the curve. You can secure 6-7% yields at the front end of the curve without taking that much duration risk and volatility, and wait and see as some of the risks that you've identified and that looming on the horizon. There's a lot of policy uncertainty. There's some risks around growth and inflation. We let those things come to us and see how they play out before deciding what to do next. But at the moment, the 6 to 7% front end portfolio is a very comfortable one to sit on.
I wanted to get your thoughts on China because there's growing sort of concerns that what we're seeing in the increasing gap between treasuries and benchmark Chinese bond yields is really showing this fear of a prolonged deflationary spiral, right? If you take a look at the 10-year, which of course has tumbled, really yields to all-time lows, that 300 basis point gap with US peers, despite the, basket of stimulus measures that we've seen, indications that the PBOC will continue to add on the monetary stimulus front. What sort of happens from here? Do you see opportunities in the extremity that we see in Chinese bond markets right now?
It definitely seems like the market is getting a bit ahead of itself in China. The Chinese bond market, if you were long in 2024, you've had an incredible year. I'd say it's hard to see that being repeated in 2025 from these levels of yields. But it does go to show that the more interesting dynamic here is maybe that the desynchronization of the economies between China and the US, right? Like you've had a year in which US yields have sold off and Chinese yields have rallied. And that really reflects the underlying economic fundamentals or direction. the correlation between the two bond markets is at the absolute lows. It's at zero or even negative. And we think there are structural reasons that are making this, perpetuating this. There's no reason why those bonds should be correlated, those markets should be correlated. And at the end of the day, you can create a portfolio of uncorrelated assets by using both US bonds and Chinese bonds. And I'd expand that to be more of Asian bonds, the whole complex being really quite uncorrelated from the US or the developed world. Now, at these yield levels, yes, they're not contributing to that 6 to 7% basket that I mentioned before. But in some cases, when you hedge them back into dollars, these bonds do get you a yield pickup on a dollar-based portfolio. So it's not crazy to add places like Thailand, maybe a bit of Indonesia, India, and the long end of Japan even, which I would say when you hedge back to USD, they get you into that 6 to 7% yield bucket.
Certainly the bond market in China is saying some fairly bleak things about the economy. We're going to get CPI numbers out of China tomorrow. We may see the country slipping into deflation there. At what point do you think we're going to see some more strident action from policymakers in doing something and in defending the bond market?
Yeah. There is definitely, a policy, I think expectations of policy action brewing in the market. The question is just when. I think both the Chinese policymakers and the rest of the world are waiting to see what comes out of the US, actually, and that might be part of the reason for any delay. But I think as we've seen in the past, the policy pivot can come quite quickly and quite radically, most notably during the time of COVID. That was a major policy pivot that happened in short order. I think if the deflation problem, and mind you, the GDP deflator has been mostly negative last year, so it's not just CPI turning negative. Other inflation metrics are already in deflation, so there is a deflation problem, and it will need to be arrested by a change in policy. We think that policy action will probably be coming, but the question is, will it be coming too late if it waits for the full first 100 days of a new U.S. administration? So that is something that the policymakers in China will have to decide, when to really roll out new measures. But in the meantime, I think one thing we can do as investors is there are times when it pays to be proactive. There are also times when it pays to be reactive and deploy cash when you start seeing the direction of the market. And we are at a pretty uncertain juncture where it might be paying to be reactive.
Just want to get your thoughts on what we're seeing in Japan as well. We've got a 30-year yield there now, the highest we've seen since 2010. The 5-year, the highest since 2009. What's your outlook for yields in Japan as the BOJ really takes its time in terms of policy normalization?
I was surprised last year when I went to Japan by 3 things. One, the discomfort around inflation that was palpable amongst the people in Japan. They've never experienced this kind of inflation. The second one is how uncomfortable people were with wage negotiations and the fact that no one had ever done them. That is, a learning process. The third one is the little costs that inflation inflicts on business owners, small business owners, that themselves are a hurdle. I'll give you an example. If you're a restaurant owner, you have to publish a new menu with higher prices. That incurs a cost, and that itself can be a hurdle to inflation because you're reluctant to print a new menu. These are called menu costs by economists. The combination of this suggests that this is a process where the BOJ will want to see wage increases leading to price increases flowing back into wage increases. As long as this process is intact, I think they will continue down the policy hiking path, but they will want to make absolutely sure that this cycle is intact. We think that it is intact and that we will see enough inflationary momentum so that they can move, this month and probably a few more times, going towards 1%. Or somewhere around that region, plus minus 25 bips. But the fact is, it is a process, and they can afford to be patient. The interesting thing about Japan is, as I mentioned, the long end of the yield curve, when you swap it back to dollars, actually does contribute quite nicely to a high-yielding portfolio. So you can actually be short the front end of the Japanese yield curve in anticipation of rate hikes, while being long the back end for that yield. I think it's a pretty interesting and uncorrelated position compared to most other developed market yield curves, most other yield curves in the world that kind of differentiates Japan, and again goes to this concept of Asian bonds, Asian markets being uncorrelated to the West.
All right, Navin Segal, head of fundamental fixed income for Asia Pacific at BlackRock. Thanks so much for joining us. Let's check in to see how Samsung is doing. Not too bad, considering the rather wretched set of fourth quarter preliminary numbers that we just received. Operating profit of 6.5 trillion won, as we mentioned, well short of the analyst average projection of 8.96 trillion won. Revenue also missed estimates, sales also missed estimates, and of course these results stoke concern about how Samsung is faring in terms of catching up to rivals SK Hynix and Micron in the AI race. SK Hynix, meanwhile, flat in Japan. Also, not Japan, South Korea, I beg your pardon. We're also tracking Renesas in Japan, off by 2.2%. The chip maker saying that it plans to cut several hundred jobs amid weak demand. Heidi.
Well, still ahead, Paul, we talk about Hyundai's partnership with Amazon in our exclusive interview with the carmakers CEO. That's coming up next. This is Bloomberg.
Hyundai's new CEO, Jose Munoz, says Elon Musk's close relationship with Donald Trump could be beneficial for all automakers. For more on that exclusive interview, our chief North Asia correspondent Stephen Engel joins us now in Seoul. So, Stephen, what are the reasons for this optimism?
Well, obviously, there's a sea change happening, or could happen, with the Trump administration coming in on the EV front. There have been signals from the incoming Trump administration that some of those pro-EV policies of Joe Biden, including $7,500 tax credits on EVs, also perhaps could be going by the wayside, and as elements of the IRA, Inflation Reduction Act, are dismantled by the Trump administration. Also, fuel efficiency standards could potentially come down. And that could encourage, again, internal combustion engine purchases or hybrids at the expense of EVs. But there is obviously a massive wave of disruption being caused by EVs. Tesla is leading the way, obviously, in the United States. So there's concern as well that perhaps Donald Trump's, leaning on Elon Musk gives other EV makers like Hyundai an unfair advantage. Jose Munoz thinks it's good for all players because it puts EVs and the wave of EV investment and development on the front burner in the Trump administration. That being said, Jose Munoz, who used to be the head of the Americas for Hyundai, now is the first foreigner to run a major Korean conglomerate, Hyundai. He is the president and CEO. He is taking those lessons that he's learned in the United States and going to broaden it out to Hyundai Motor globally, but starting as well on the leading edge of technology. He is the first car maker that really went live yesterday on Amazon Autos. So you can doom scroll at night, surf Amazon. You can buy a car as well in as little as 15 minutes. Just be careful about the number of, or the quantity that you click. Obviously, it's a big ticket item. This is my conversation, the walk and talk, as we call it in TV, with Jose Munoz about the Amazon deal, which really goes live today.
Our objective is to make it more convenient, and how the number one benefit for the consumer is that not only you have full transparency on the process, but also the full shopping process is much shorter. So it comes down to an objective of 15 minutes. We are there, we're very close, 20 minutes or so, down from about 3 hours. So especially for younger consumers, that they know what they want. They don't want to spend so much time, and even if they like going to the dealer and do a test drive, etc., they can enjoy all that at their own pace. They can go online and offline as they wish, and then finally they get the unit delivered at the dealer of their preference.
What does this mean for the more than 800 dealerships you have, independent dealerships you have across America? Is that going to shrink because of this?
Well, we believe so. Basically, this is a volunteer program. So roughly 80% of the dealers have jumped in and signed in for this feature. And then those dealers, they understand that this is something that is happening in the industry. And then we believe that we are pioneering and we're giving a unique opportunity to our consumers and our dealers to enjoy this feature. For them, it's a new channel. And the beauty of this is that it is not in competition with their own dealership. It is a way to boost the performance of the dealers to sell more cars, get high profits, and basically increase the business. So we don't see this as a substitution, but as an addition.
It takes sort of the fun out of going to a dealership and kicking the tires. I mean, could there be a haggling aspect with Alexa?
Well, I don't think the fun of going to the dealer is removed at all. So basically, you can go shop, you can visit your dealers, for example, and then spend time and check and do test drives, whatever you like. But maybe that day you have all the commitments and you don't have the full time to spend through the entire process, including the financing, the trading, etc., etc. So you've already tested the car, for example, and then comfortably at home the day after or 1 week later, you can just go online and then do all the online process.
So what percentage of sales in the United States will be coming through these channels, say, in the first year compared to 5 years and down the road?
Well, I would say that a minimum expectation is to get to around 10% of the total sales at this level very soon. And I think if both Amazon and us, we make a good job, I think this percentage it is going to grow, especially for younger consumers, and in particular for electric vehicles, perhaps up to a 30% level by 2030, maybe more.
And it was a wide-ranging interview. I mentioned all that Trump and Musk stuff, but coming up in the next hour on the China Show, we'll go in depth on some of the other aspects, including the political crisis here in Korea. Also, the one issue that is keeping boardrooms of American and European and global car makers up at night, and that is the threat from China on scale and price. How do you compete in China, with China globally? We talk about that quite extensively, as well as the proposed Nissan-Honda merger, at least the talks for that merger. Keep in mind, Jose Munoz was the chief performance officer 6 years ago at Nissan. He has inside information about how that car maker works. Of course, things fell apart when the Carlos Ghosn saga happened, but he's moved on to Hyundai, and it just makes you wonder how things could have been different if he'd be leading Nissan at this time and not Hyundai, but that's for another discussion. Back to you guys.
Our Chief North Asia correspondent Stephen Angle there in Seoul. Another story that we're following, speaking of autos, and Honda has debuted prototypes of its two latest electric vehicles, a sedan and an SUV, to be built in the US. Both models have a new in-house operating system called Asimo that controls functions including advanced driver assistance. Honda also announced that it's partnering with Renesas Electronics on a high-performance chip for models due later this decade, Paul.
Yeah, Honda shares kind of flat at the moment. We have heard from a Honda vice president today speaking in Japan. It says that Nissan may need to trim excess capacity and jobs. He also disagrees with the Hyundai CEO, saying that future US EV output could be at risk under a Trump administration. Hyundai, meanwhile, better by 0.25%. Toyota, meanwhile, also moving higher. How's this for a story about diversification? Toyota's investing 7 billion yen in a Japanese startup, Interstellar Technologies, looking at mass-producing lightweight rockets to compete in the commercial space industry. We've got more ahead on the Asia trade. This is Bloomberg.
I'd be delighted to go see him.
Have you been invited?
Not yet, but I would be delighted to go see him and congratulate him and do everything we can to help this administration succeed.
Nvidia CEO Jen-Hsun there speaking with Bloomberg Technology co-anchor Ed Ludlow. take a look at Nvidia, and of course, this was really kind of a record rally that was very much at risk of coming down, depending on what Jen-Hsun said. A lot was expected in terms of what he could potentially shed light on, and clearly a little bit of disappointment. But of course, this is the largest one-day market cap loss that we've seen for Nvidia, but it came off, a record high, and this is still a company that is pretty close to reclaiming its position as the world's most valuable company. But we've seen that wave of call option sales as well as the stock drops from that record high with large volumes there. The selling kind of really reversing the trend of call buying that we've seen across previous sessions ahead of that CES presentation. But we can't really be surprised given the levels that we've seen for trading in Nvidia stock.
Well, let's get to some other tech stories that we're tracking. OpenAI rival Anthropic is said to be in advanced talks to raise $2 billion in a funding round at a $60 billion valuation. Now, sources say Lightspeed Venture Partners is leading the round. Anthropic is one of many startups raising billions amid the hype over generative AI. Amazon said in November it was investing an additional $4 billion to boost its stake. Meta Platforms says it's ending third-party fact-checking on its social media platforms in the US. Its new Chief Global Affairs Officer, Joel Kaplan, says in a blog post that content moderation systems across platforms have gone too far, blocking users' free expression too often. Meta says instead it's moving to a community notes system that lets other users comment on a post's accuracy. Microsoft is planning to spend $3 billion in India to expand its cloud computing and AI capabilities. CEO Satya Nadella pledged the investment over 2 years at an event in southern India. The move aims to tap into the country's large AI talent pool and fuel Microsoft's revenue growth. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at what we're watching when it comes to data just crossing the Bloomberg on inflation in Australia. The CPI numbers for November coming in a little bit hotter than expected, 2.3% year on year against expectations of 2.2%, and also an acceleration from the prior month of 2.1%. The trim mean reading year on year at 3.2%. That is a little bit softer than the 3.5% in the previous reading. So we continue to really see the sort of heat being retained in that November CPI. That's likely to push back sort of expectations even more when it comes to expectations from the RBA in terms of when they can potentially begin that rate cut cycle there. We had been sort of, in terms of Bloomberg Economics, expecting that further cooling of inflation to carry through to December and the fourth quarter numbers more broadly to potentially put a rate cut on the table for the February RBA meeting. That's looking perhaps a little bit less likely, Paul, with this slightly higher than expected number.
Let's just take a quick look at how markets are tracking around the region. Not a lot of reaction from the ASX. It's been a pretty quiet day here today, pretty much flat at the moment. The Kospi, though, very much in positive territory, and a lot of that is thanks to Samsung, which despite a pretty disappointing set of fourth quarter numbers, preliminary results anyway, which missed on basically every metric, Samsung shares pushing higher by 1.8%, and that's propelling the Kospi forward as well. Of course, the political situation in Korea does also remain tense. The arrest warrant for President Yoon has been renewed, so that standoff at the presidential residence continuing. So we await for any developments on that as well. Nikkei, meanwhile, that's off by almost 1% now, and the yen remains very weak, hovering just below that 158 level, Heidi.
Well, Paul, investors in China's bond market have never been so pessimistic. Some are now piling into bets on a deflationary spiral. Our Asia credit editor, Finbar Flynn, joins us now to talk about the implications for the Chinese economy. And, the sort of Japanification of the Chinese economy is something that a lot of people have been talking about for years, right? What's kind of changed in addition to the debt overhang, the demographics, the property sector? Are expectations just so pessimistic right now?
Hey, good morning. Yes, I think this really is a story that the bond market is telling the world right now. We saw last year, and this really put it on the map again, that the yields on Chinese super long bonds fell below those of Japan. And that is something that is pretty unprecedented, obviously. And we've seen in the last month, we've seen a really, a 40 plus basis point drop in the 10-year yield for the 10-year Chinese government bond. And we're just renewing these record lows almost daily. So that really is putting all this very much front and center for investors.
So if we compare China now with Japan in the 90s and up until very recently, what are the similarities here when it comes to these lost decades?
So in terms of the similarities, there are some stark similarities, unfortunately, in many respects. You have a lot of economists out there saying, for example, that the property crash is actually one of the main things here. The crash in China is even larger by some metrics than what actually happened here in Japan. You have overstretched housing prices, you have a lot more supply to get through, and the property was a much bigger part of what actually is the Chinese economy than it ever was in Japan. So another major part of this story then is the demographics. China's population is decreasing like Japan's, but worryingly, China's population is decreasing now, whereas at the start of this, I suppose, a multi-year phase, whereas Japan's population only started to decrease actually midway. It didn't decrease in the 1990s, for example, when the bubble burst.
I think a lot of the optimism has always been that, as a centralised government, China can do a lot more to steer the ship, right? Despite it being a very large ship that's difficult to steer. Have we seen that as being quite challenging to sort of address a confidence spiral?
So one of the really core issues here is that actually it is how the authorities and the policymakers have addressed this. And the real big worry is that the longer this goes on, the more pessimism grows, that you have this negative loop, this negative feedback loop, and that is exactly what happened in Japan. And we're in this stage now for the last, I suppose, 3 or 4 years since the property crash with Evergrande. And even though the government has a lot more levers to pull, it has been reticent in coming with those bazooka-type policies, and that is exactly what happened here in Japan. Although I will note that we are seeing a change in tone from China in the last month we had some major announcements, and we had that flurry of policy announcements in September as well. But more needs to be done.
Bloomberg's Asia credit editor Fengba Flynn there. Let's take a look at some of the other assets that we're watching. And of course, a lot of this really coming down to the demand expectations from that major Chinese economic story, right? Take a look at oil at the moment as we see a little bit of upside there when it comes to trading in New York crude. We have broken out of that sort of very narrow trading band that we've been stuck in since about October. A second day of rallying when it comes to oil prices, a drop in US oil inventories might be at play there, with the API report showing a 4 million barrel decline in stockpiles. That would be a 7th straight week of declines there. We also saw production out of Russia below the OPEC Plus output last month as well. Cushing stockpiles also seeing a decline. When it comes to gold at the moment, we are seeing a little bit of upside there. It has been sort of a to and fro story when it comes to gold, depending on the moves that we're seeing in the dollar, and that sort of resumption of dollar strength is playing there as well. We also had China's central bank earlier announcing further gold purchases.
Let's take a look at the China economic forecast, meanwhile, for 2025. This is a Bloomberg survey. Real GDP growth, 4.5%. I mean, these are levels that would still be the envy of any developed nation, but by China's standards, that's looking somewhat soft. The expectation is, though, that China stays out of deflation in 2025. CPI survey median there, 0.9%. PPI, meanwhile, showing a contraction. Retail sales appears to be remaining fairly soft, according to this survey of economists for 2025. Well, Suntory CEO Takeshi Niinami says he's not optimistic about the global economy this year as China's headwinds continue and nations brace for Donald Trump's policies. Niinami is also the head of the country's influential Association of Corporate Executives, and he told us Japanese firms are still willing to invest in the US despite the Nippon-US Steel deal being blocked.
I'm not so optimistic about the global economy going forward. The reason behind is China is not good, and Europe is not good, and only one country which I can boast to say it's good is the US. I think whatever happens in the United States in terms of the political turmoil, definitely US economy will be leading the world economy. But its impetus is not too significant, so that Japan will be benefited a lot from the US, from the world economy. So that means I think we can't rely on the global economy as a country Japan. So definitely we have to be more focused on the domestic demands. So first and foremost, world economy is less impactful comparing to last year. The reason is China. China won't come back within a year. So, and how we can depend on the US, but the US will be insular more and more because of the new president's policy. So I think our economy is not as good as last year.
Mr. Trump takes office this month, and what issues do you think the Prime Minister should prioritize in this new phase of the US-Japan relationship?
I'm not concerned about the relations between US and Japan. The reason is Japan is the largest investor amongst all those investing into the United States. Japan has been creating lots of jobs in the US. So in that regard, Japan is the best ally and supporting a US economy. So we should be proud of it. And knowing that, we should face up to the new policy of Trump 2.0. That means one, tariff. We are the fifth largest trade surplus to United States. So we have to be careful about that point of the trade issue. But always, again, we have to talk about our contribution to the US economy. That's the first and foremost we have to demonstrate to the new administration. And plus, we are still willing to invest to the United States, despite the fact that the Nippon Steel and US Steel issue, which is still going on. But we are willing to be in part of the US economy.
And Prime Minister Ishiba and Mr. Trump are reported to meet in February or later. So do you have any requests to the Prime Minister? Do you think how important is a closer relationship between them?
Like I said, our Prime Minister will be talking about our huge contribution to the US economy in terms of generating lots of jobs in the US. And that will last perhaps more and more for us to invest to US. But one thing is our Prime Minister may have to talk about is we are the best ally. So it's disturbing that US Steel and Nippon Steel deal will be broken because we believe US is the best ally for us too. So there is a goodwill between the two countries. So goodwill between the two countries should be addressed repeatedly by giving facts of the numbers like how many jobs we have created in the United States. And Suntory created jobs. We are investing. So a lot of Japanese companies are creating jobs in the US. Despite that, we are still enjoying the surplus of the trade with the United States. But having said that, we are a big contributor.
Suntory CEO Takeshi Niinami there speaking in Tokyo. Coming up next, a crisis in one of the world's largest carbon offset projects highlights the limits of this controversial tool. We have the details next. This is Bloomberg. Advocates of carbon capture and storage are hoping for a revival of the industry in 2025 as governments and polluters struggle to make progress on net zero emissions goals. One of the biggest projects in the world is trapping millions of tonnes of carbon in the muddy peat bogs in Indonesian Borneo. Bloomberg Originals has been taking a closer look.
This patch of tropical forest protects one of the most endangered ecosystems on our planet. It could have been cleared for palm oil. Instead, huge multinational corporations have paid to safeguard it. It's called Rimba Raya, and it sits on the island of Borneo in Indonesia. The land traps and stores carbon dioxide. Carbon credits are designed as a way for companies and countries to compensate for the emissions they produce. In Rimba Raya's case, carbon credits fund the protection of its forests and peatlands that can store 8 times more CO2 than a typical rainforest of the same size. Its credits also pay for conservation efforts.
This is an emerging asset class. It's an opportunity to exponentially grow the global economy based on the ever-increasing value of these natural capital assets.
And that means a fight over the spoils.
So what we have here is essentially a battle between companies and the Indonesian government, all fighting for a slice of the profits.
The fight over this protected jungle highlights one of the most pressing questions in the climate change battle. Who profits from saving the planet?
Subscribers can see that full documentary on the terminal or at Bloomberg.com. It will also be available later on the Bloomberg Originals YouTube channel. Let's get some more now with our Bloomberg climate and ESG reporter, Cheryl Lee, joining us from Singapore. So tell us a little bit more about the scale of the carbon market. It's projected to reach $1 trillion by 2050. What is kind of the elements that we're looking at and some of the challenges for this space?
Right, of course. Great to be with you today. So, firstly, this market is about $1 to $2 billion today, and yes, it is poised to reach $1 trillion by 2050. I think we should differentiate that I'm talking about voluntary credits here, which are a rather different animal from compliance credits. And there are a few factors behind this drive towards 1 trillion. Firstly, there are companies and governments all across the world who are setting net zero targets and finding it increasingly difficult to meet them. And so that's why they are looking to buy offsets to make up for the emissions that they are releasing into the atmosphere. And secondly, there is a bit of a cleanup going on right now in the industry, and we are seeing new guidelines that are being set that will differentiate high-quality offsets from lower-quality offsets. So you have both a case of demand increasing and also prices of high-quality offsets going up. So both of these are driving the $1 trillion market.
We're seeing a lack of alignment really between governments and companies over this. What do these disagreements mean for the wider carbon industry and investors?
Right. So the governments and the companies, they are fighting for a slice of the profit, and it means a lot for investors because investors want certainty when making their investments. So when you have government regulation that is being introduced into the market, then you have more political asks, and with that you also have less investments, more uncertainty, and even more lawsuits. So it has a huge impact on investors that are looking into whether they should put their money into these carbon projects across the world.
Is there an integrity crisis? There are lots of accusations of greenwashing using carbon credits.
Yes, accusations of greenwashing are an issue that have plagued the carbon credit industry for a long time now. And as I mentioned earlier, there are efforts ongoing to do the cleanup. And that really bodes well for the market. And in fact, last year in November, the climate conference, COP29, negotiators across the world agreed on rules for a United Nations supervised market that will see companies and countries being able to trade credits on the market. So all those regulations that are coming in place in the short term, it's going to provide uncertainty for the investors, but in the longer term, it is good in terms of stamping out accusations of greenwashing and giving governments and local communities a greater share of the carbon credit revenues.
All right, climate and ESG reporter Cheryl Lee there. And subscribers can read that story in full on the terminal or at Bloomberg.com. We have more ahead on the Asia trade. This is Bloomberg. Nvidia shares fell after a wide-ranging product presentation by CEO Jen-Hsun failed to win over investors in the chipmaker. Huang also spoke to Bloomberg Technology about plans under incoming President Donald Trump, as well as the impact of AI on the gaming industry.
AI is going to reinvigorate the video game industry. On the one hand, for developers, it's going to reduce the cost of creating the content. On the other hand, all of the characters that are in the games are going to be smart characters in the future. So every time you interact with them, they're going to be interacting with you in a much more intelligent way. And so the games are going to be more interesting. The characters are going to be more interesting. The content development cost is going to decline. And that's going to be really great for the industry. And so I think that the future is really bright for video games and these virtual worlds. And artificial intelligence is going to really reinvigorate it.
Project Digits. May I pick it up?
Yeah.
$3,000 Project Digits.
Yeah.
A supercomputer you can
sitting
put on
right
your
next.
desk.
Exactly. Could you imagine you're just sitting there just like that? You're working on your PC.
Well, I can't imagine. Why would I need one of these? Probably not me. But how big is the addressable market for this? What is the addressable market?
There are 30 million software developers. There are probably something along the lines of 10 million designers around the world. Probably another 20 million creative artists. Hard to say exactly how many students. I'm going to guess probably a couple of 100 million students around the world. Everybody's going to have to. Everybody's going to have to. Well, they can afford computers, and so if they can afford computers and they would like to have a companion that helps them do AI, this is the way to do it.
Can I just clarify something on it? I think you said on stage Mac OS, Linux, and Windows, but the communication said just Linux.
No. Whatever computer you use, you're literally enjoying how it's going to be used. It's sitting right there, and you just connect to it wirelessly like it's your personal cloud.
I promised the audience I'd clarify that because they're excited. We're running short on time. President-elect Trump has been speaking during the course of our conversation. How imperative is it that you go to Mar-a-Lago and meet with him if Nvidia is America's leading AI company? And will you?
I'd be delighted to go see him.
Have you been invited?
Not yet, but I would be delighted to go see him and congratulate him and do everything we can to help this administration succeed.
A lot of what you outlined on stage last night in the realm of physical AI, I saw Xpeng, for example, in the autonomous driving context. That's happening in China. Like, they are doing a lot on robotics. So I'm going to ask you about tariffs. it's likely this coming administration will be as restrictive on technology export, and tariffs will be a function. How have you prepared for that, Jen-Hsun?
Whatever the administration ultimately decides, we'll give them as much insight as we can from our perspective. And I'm sure that the administration will make the right moves that's in the best interest of our country.
Nvidia CEO Jen-Hsun Huang there speaking with Bloomberg Technology co-anchor Ed Ludlow. Let's take a look at watching when it comes to trading that's currently underway here in Australia. We're actually seeing a little bit more upside now when it comes to trading in Australian stocks, up by 0.2% there, raising some of that earlier gain, though, as that trim mean inflation slows. Sort of after the CPI numbers, which may or may not kind of move the needle when it comes to expectations from what the RBA might do this year. This is a picture. The Aussie dollar seeing a little bit of downside, though, as is the case when it comes to some downward pressure across most Asian currencies, given the resurgence that we're watching in the US dollar. That is it for the Asia trade. The China Show is next.